Good evening and welcome to this week's special presentation. It is my pleasure, Senior Consultant Ryan Shook, to give you tonight's presentation, Timing Your Moves for Maximum Return. Now this week we will dive into Dr. D's little green book to gain some insight and wisdom on how to manage positions and trades so that way we can maximize returns in your portfolio. Now we will dive into our stop prices, see the importance and how these stop prices are calculated utilizing the VectorVest 7 system. In addition, we will talk about the relationship between the stop prices and the buy, hold, and sell recommendations to keep you in winning trades or mitigate losses and losing trades going forward. And at the end of this presentation, I will talk about the importance of the buy-sell ratio and how we determine that ratio to get insight on the overall health of the market. So if this is something that you're looking for, let's go ahead and get started. Now, just real quick, if you're a subscriber, to locate the book here, you are going to go to the training tab. Once you're at the training tab, on the bottom right corner, you'll see Stock Strategies and Common Sense, the Download Now button. Just click on that, and then a PDF file will appear on your screen, bringing you right to the book itself. All right, this evening, we're going to focus on Chapter 14 of Stock Strategies and Common Sense, titled Stop Prices, Are They For You? Now, I did take a very important quote out of the book here because we all know selling stocks is not fun, definitely not as exciting as buying stocks themselves. You can see right here, Dr. DiLiddo stating, selling is the most difficult part of successful investing, yet it is avoided like the plague. The reasons are clear. Buying a stock is fun, a positive event. It is the beginning of a hopeful relationship. Selling is a negative experience, the end of the relationship. Hope to future profits are gone and losses become reality. Tax consequences must be addressed and the proceeds need to be redeployed. Selling is not fun, but must be done. Now, as investors, we can all relate to this experience. However, utilizing the VectorVest 7 system makes this experience a much better process. Now, on the following page of the little green book on page 56, there's a great quote utilized by Dr. DiLiddo to show you the difference between a traditional advisor and that of the VectorVest 7 system. We can see here the quote states, many advisors suggest that stop prices be set at 10% below purchase prices. I have found that the stop price of a stock should be based upon its safety, fundamentals, and price trend. Now, safe stocks with solid fundamentals should have looser stop prices than those with weak fundamentals. These considerations allow investors to stay with solid stocks longer and get out of weak stocks sooner. VectorVest is the only service that provides dynamic stop prices on every stock every minute of the day at no extra charge. Now, with this information in hand, let's dive into the VectorVest 7 system so that way I can give you better visuals of this information and show you the power of the software itself. All right, now we've got three stocks here, NVIDIA, Apple, Tesla. The reason why I chose these three stocks, because a lot of people watching this will definitely have had some experience with one of these three, as they're some of the top biggest companies in the market as a whole right now, especially with the popularity of NVIDIA and Apple. And everyone knows Tesla's on a pullback right now, so we will take a look at that as well. Now here you will notice I do have the stop price right next to the current price of the stock itself. I also have the fundamental information with the RV and RS. I have the price trend here with RT, relative timing, and the overall combination with VST. Again, if we refer to the book here, the stop price both needs to look at fundamentals, being RV and RS, and the price trend itself. So that being said here, with NVIDIA currently trading at $888, it does have the loosest stop right now at $715. But if we look at its fundamentals, very strong fundamentals here, and it's currently in an uptrend. So at no surprise, we are giving it that loose of a stop. Now, next up on the list, we do have Apple currently trading at $170. Very tight stop on it right now at $168. But if we look at the RV and RS, they're slightly above one. I mean, the fundamentals are decent, nowhere near as good as NVIDIA Corp. But look at the price trend right now at 0.95. That is currently in a downtrend when it comes to the RT. Thus, it does have a tight stop right now at 168, giving us a cushion of about $3 here. So you can see how the fundamentals and the price trend itself affect the stop price. Now, if we look at Tesla, currently trading at $162, the stop price is actually below its stop right now at $175. This company has mixed fundamentals, RV greatly below 1, sitting at 0.63, while the RS, a relative safety, at 1.26. So they are mixed right now, but look at its price trend. Very poor rating at 0.39. So we're seeing a lot of momentum to the downside right now. So at no surprise, it is trading below its stop. So now we are going to talk about the correlation between the stop price and our recommendations itself, being the buy, hold, and sell rating. Now again, just to recap, the stop price is a 13-week moving average adjusted for the company's fundamentals. Now, if the company has strong fundamentals like we saw with NVIDIA, we will loosen that stop criteria to give that stock more room to run. Now, if the company has poor fundamentals or is in a downtrend, like what we saw with Apple and Tesla, those ratings would change accordingly. Now, if we take a look at the book here, we can see how these ratings are determined. Now, a stock gets a buy or a hold rating if the price is above the stop price, and it gets a sell rating if the stock is below the stop price, like what we saw with Tesla. Now, the distinction between a buy and hold rating is made on the basis of safety, fundamentals, and price trend. Now, strong stocks receive a buy rating much more rapidly than weak stocks. Now, with this background in mind, let's see how stop prices can be used to control losses and protect profits. So let's jump back into the software. I'm going to show you the correlation between those stop prices that we saw and its fundamentals with RV and RS compared to its price trend being RT, relative timing, to see how the ratings matched up. All right, starting with NVIDIA here, we can see strong fundamentals once again. RT is above 1, so we have that price trend in our favor. The overall master indicator is also above 1, thus the buy rating has been given. Now, if we take a look at Apple here, we do see the fundamentals do meet the criteria. However, the price trend does not, being at 0.95. Thus, with the RT below 1, even though the VST is above 1, the hold rating has been given. Now, just as a reminder, for a buy rating to be given, both RT and VST have to be above 1, with the stock price moving away from the stop STOP price in order to be a buy. Thus, with price action going down and RT below 1, the hold rating has been given. Now, the only sell stock here and the only criteria for sell rating is for the price of the stock itself to be below the stop price, which we see here. Thus, the sell rating has automatically been given. Now, let's take a look at these ratings on a chart just to get a better visual of this information. Here I have a chart of NVIDIA as well. Let's take a look and see what the requirements are of a buy, hold, and sell rating. You can see right here when a stock price rises above the stop price, has good fundamentals, and is in an uptrend, the stock will get a buy. Thus, RT, VST have to be greater than 1, and the stock has to be diverging away from the stop price itself. In turn, the stock will get a buy rating. Now, for a hold rating is when a stock price is above the stop price, but one of the other criteria is not met. The stock will get a hold. Now, for a sell rating, the stock just simply has to fall below the stop price, and the stock will automatically get a sell rating. You can see here over the last year, NVIDIA has not had a sell rating at all, just buy and holds here. You can see the stop price and the price action of NVIDIA itself. NVIDIA has remained above this stop price the entire time. Even here, the close was just above the stop price itself. You can see the close that day at 407.80, while the stop price was 402.34. So even on that pullback, our stop price did a great job of keeping investors in this position to get ready for the following rally. It's still diverging away from that stop price as both of these rise over the last few months. Now, in order for NVIDIA to get a sell rating at this time, it would have to drop below $715. That's why I suggest you use these buy, hold, and sell ratings as ratings and not actual recommendations. You really have to ask yourself, if you're in this position at $888, do you really want the stock to go down to $715 in order to get a sell rating? Now, this would be determined by an individual's risk assessment. But if NVIDIA loses this buy rating and becomes a hold, that's going to be your first warning sign of this position losing momentum to the upside. Next up, we have Apple on the list here. You can see a nice buy rating here in the first half of last year, diverging away from that stop price. Kept us in this position until recently. You can see the one and only sell rating on Apple was given as of just a few days ago here. You can see the close was at 169.12, while the stop was at 169.20. Thus, Apple did receive a sell rating just a few trading days ago. Now, if we take a look at Tesla, kind of all over the place over the last 12 months here, you can see buy ratings coming in back in May of 2023 when the stock was diverging away from that stop price and above it. In addition to that, the VST and RT had to have been above 1 at that point. Now, that stock was trading around $185 that day, hitting a high of $299. So the stock almost doubled in price. So that's why I'm saying you really have to ask yourself what your initial goals are when getting into a position, because you can see the stock faltered shortly after with the sell rating coming in at $219. Now, more recently, our first sell rating came into Tesla at around $182 here. Now our stop at that point was at $195. That was our hard line in the sand. And you can see the downtrend still continuing, with Tesla currently trading just below $163. Now, just a little trick, and to be able to utilize VectorVest in a more efficient manner, if you come to Unisearch, over on the left-hand side, you have all the folders here, and there is a folder titled Trends and New Stuff. And you'll see their searches here, new buy rated stocks. So if you want to find stocks that just got a buy rating to get in early, you can just simply run the search and the stocks will appear here. Now you can do the same thing with new holds and new sell rated stocks. So this is a great place to save time and energy and find stocks with new ratings. So that way you can take advantage of new trends forming, whether being both bullish or bearish in nature. Now I'm going to tie our buy, hold, and sell recommendations into market timing. And the way we do that is through our buy sell ratio, or BSR. You can see here over on the left, VectorVest at a glance. Currently you're tracking 2,928 stocks throughout the US market. Of those, 1,812 have a buy rating, while the sales come in just over 2,100, and the remaining are hold. Now this is a simple ratio, so since the sales, currently sitting at 2,100, outweigh the buys, the BSR is below 1 right now, in unfavorable territory. Now this is a very simple yet effective way to determine the overall health of the market. Just think about it. If there's more stocks in the database or in the market with a sell rating, that indicates an overall unhealthy database of stocks. However, if the buys currently outweigh the sells and the BSR is above 1, that's telling me that the database or the market itself is in healthier territory. So to utilize this here, if we take a look at the color guard, you can see the trends of that BSR. Now on March 13th, the BSR was above 1 in favorable territory at 1.2. Thus, we had the green light there because the BSR was moving up day over day and from the prior week. Now come March 14th, after the inflation data came out, you can see a big drop in the BSR here from 1.2 to 0.86, where it currently sits at today. Thus, with the BSR below 1 in an unfavorable territory, this is letting our subscribers know that we're currently in an unhealthy market. Now, two things to know when it comes to BSR. It can be seen as the canary in the coal mine. Anytime you see BSR go below that point of 1 in an unfavorable territory is a great first warning sign of weakness in the overall market. And if we zoom into a 3-month time span, you can see the BSR going below an unfavorable territory several times since mid-February, letting our subscribers know of the potential weakness in this current market rally. Now, the second thing I want to show you, if I go back to a 1-year chart, now the BSR typically likes to bottom out around 0.2 here. You can see when the market was going down, looking for a bottom, it crossed below that 0.2 mark back on September 20th, 2023. Now, just because the BSR dips below that 0.2 range and the market's looking for a bottom, doesn't mean to just go out and start buying stocks. You want to see some confirmation to the upside here. By November 2nd, 2023, we see the BSR getting back above that 0.2 level, showing a turnaround in the market. Now, I'm not going to go over it in this presentation because this is more of a bottom fishing strategy, but you do want to couple this with some of our market timing signals before just entering positions in the market. Now, it's only fair I share with you the last part of this presentation and the last point he made when it came to this chapter in the book. Now, this is on page 57 here, the case for not using stop prices. He states, just to be fair, I must tell you that there are many successful investors who do not use stop prices. The theory that if you buy safe, undervalued stocks rising in price, which will make more money year after year through good times and bad, they will go up in price over time. Now that does sound very familiar, right? Because that is the theory and the concept behind the VectorVest 7 program. And you'll see it right on the homepage. You know, we advocate buying safe, undervalued stocks that are rising in price at this time. Now, the example that Dr. DiLiddo used in his book was with Warren Buffett. You can see here an extremely successful investor does not use stop prices. He says it's too short-term focus and does not reflect his buy and hold philosophy. He maintains that it is impossible to time the market and views price drops as opportunities to buy at discounted prices. Moreover, he is alleged to have said investors should be greedy when everyone is fearful and be fearful when everyone is greedy. Now, I do believe that that last statement definitely relates to current times because we're seeing the buy-sell ratio dip in a negative territory. And with most investors being greedy in this current rally, you can see from the statement here, this would be a good time to be fearful in nature, according to Warren Buffett. All right, now I hope you enjoyed this week's presentation, Timing Your Moves for Maximum Returns. Just to recap here, we dived into stop prices, what our stop price is, how it is calculated, and how it correlates with our buy, hold, and sell recommendations for individual stocks. And at the end, I showed you how we took those buy, hold, sell recommendations from the entire database to come up with our BSR, or buy-sell ratio, to determine the overall health of the market. Now, my name is Ryan. It's been a pleasure giving you this week's presentation. And if you have any questions, please not hesitate to contact support. Good night.